have with us this week in Crypto Week in Review, Jack O'Halloran and Bram Cohen. Jack is from Scale Labs and Bram is from Switchere Network. We'll just start up with maybe some self-intros. We'll start with Jack and then Bram.
All right, great. Hey, awesome to be here. Thanks for inviting me, Tech. Hello, everybody. My name is Jack O'Halloran. I'm the CEO of Scale Labs. We're the core team behind the Scale Network. The Scale Network is a multi-chain blockchain network that is Ethereum native. And so what that means is many blockchains are one blockchain, and Scale is an internet of blockchains designed to help Web3, decentralized finance, gaming, and other smart contract oriented applications run fast and smooth, and also ultimately with the goal of supporting the Ethereum network.
Should I introduce myself?
Yeah, you're up. Go for it.
All right. Yeah, I'm Bram Cohen, mostly known for having created BitTorrent. And I've been working the last few years on a new greener cryptocurrency called Chia. We started transactions recently, so we're up and running, but have lots more stuff coming out soon. Tech, you're muted.
Oh, sorry. I'm muted. Sorry, yeah, Chia. My last name is Chia, so no relations there. But
it seems it's a common name in like Singapore, but usually they pronounce it Chia, I think.
Yeah, it's pretty common name in Singapore. Yeah, but chia seeds are more connected to food here.
Yeah. So hey, by the way, Tech, a fun fact for everybody. Bram and I had dinner together a full market cycle ago. I think it was 2017, and then I don't think we've seen each other since. We've both been building, but it's a reconnect after literally a full crypto cycle.
Yeah, that's why we got you guys together. No, I'm kidding. But
awesome.
This is a good segue to our first topic. I mean, we have to look back in the weekend. The top of mind stuff for most crypto folks is the market volatility. It is volatility in the wrong direction for the most part. But I think it started out with, it was kind of triggered by Elon Musk's kind of pulling back on accepting Bitcoin on Tesla.com. So you can't really buy Tesla cars with Bitcoin anymore. And the reason was because, he was not happy with the environmental impact of Bitcoin. So I wanted to start there because that was the trigger, I think, and then other things happened. Wanted to get your opinion on whether he's right, he has a point, and he, of course, famously tried to make Dogecoin better, and Dogecoin went up in price and everything else. Yeah, so I'll just open up, and whoever wants to comment.
So you can, as you might guess from what my project is, I'm going to say, yes, Bitcoin is most definitely bad for the environment. I think thinking that Dogecoin, which is this like abandonware knockoff of Bitcoin, is going to be in any meaningful way different is like horribly naive. Doge is it has mining exactly the same way Bitcoin has mining and has nobody maintaining it. As of a few months ago, there were a literal handful of Doge full nodes in the entire world. It's like just barely a functioning project at all at this point. And I don't think the general public thinks it's super cool to try and pump Doge to the point that it replaces Bitcoin. That's not, I mean, that'll win you meme lord friends online, but that's not something that the general public is going to be super supportive of. If Doge makes serious inroads, that's an indicator of a very unhealthy ecosystem that's based entirely off of memeing rather than actual software development going on.
Yeah, and I have to say, I think Bram and I are both builders in the space. We're out there literally, I think almost 4 years ago since we last talked, and we've probably been working 100-hour weeks every week since then. And then you see something memeing its way into every single person's wallet across the United States. And hey, I think in a way it's interesting because it grows more awareness in the space, but also it kind of draws attention to some of the less, I'd say less, real traction pieces and more kind of like vaporware or like memeware pieces of the industry. And my big takeaway, and by the way, I think Elon had some good points there, and I'm excited about Chia. I'm excited about some more green methods. Scale's a proof of stake, which is also green. It's not in the proof of work zone, but the main takeaway for me was, I think if in 2018, with this type of headwind and all the things that happened after this series, it was like a boxing match, and crypto is just getting punched right and left. And you know what? We're still standing and we're recovering. It's because of the traction. It's because of the builders people out there like Bram and many others that are making real products with real traction and real utility.
Yeah, in terms of really material things, I think I'm generally not one to make price predictions ever, especially in the cryptocurrency space. That's really like a fool's errand to try and predict where the price is going to go. I mean, if it were up to me, the price of gold would be at its industrial value, and obviously it's not, right? So but I have to think that the current price of Doge is a very bearish indicator for the market. That's really not healthy, particularly the price of Doge relative to lots of other things. On the other hand, in terms of things that are really material, Tether has 50 billion real dollars behind it right now, and that wouldn't have happened if there weren't things people actually wanted to do and were doing with that money.
Yeah, I agree. I mean, you guys are like the honey badger of the crypto industry. You continue building regardless of the price. And Doge, I remember back in 2014, I went to the first DogeCon, which was done as a joke, I guess. Like the whole thing was a meme coin, and it was like I'm not sure the mining now. I think it's like merge mine with Litecoin. I believe. I believe still is to some extent, and not much improvement since then. But you can see that the crypto industry is like partly driven by memes and partly driven by builders, right? And both are kind of important to the success of crypto. Of course, like you see Doge rise at the top, you're kind of is driven mainly by just Elon Musk tweeting, supporting it. So there's something to be learned there in terms of like you need both in order to spread awareness, in order to educate. But again, you could educate it in the wrong way. But
well, I mean, Elon's just using his playbook. I mean, look at the price of Tesla shares, right?
Exactly. The Dogecoin of Nasdaq, maybe. I don't know.
There's a few things he's really good at, and he does them frequently, and not just for one company.
Right. He's the master of that, the troll of both Nasdaq and crypto. And then he was on Saturday Night Live the week before, I believe. So he got a lot more, like fame right before that. So interesting. Yeah. So I think we've been in crypto long enough that these kind of like volatility doesn't really. It's like we've seen these before. Like I went back to last year's price. We're still like over 4x from last year, last June. I mean, we're still pretty good. Yeah. So no worries.
Yeah, and I think like my perspective, I remember I woke up that morning and all of a sudden it's like, everybody probably experienced the same thing. You look at your phone or your computer and you're like, whatever your crypto holdings were worth about half what they were when you went to sleep, depending on what time zone you're in. But in a way, it's acutely jarring, but it's also soothing and for builders, I think, because one of the challenges during bull markets, if you are really building real software that's going to have a real impact, is fighting through this noise. And unfortunately, a lot of people are putting like hard-earned dollars into, or whatever your currency is, into things that are pretty hollow. And it's the downturns actually end up driving more and more money and more investment and more backing and more stake into higher quality initiatives that are going to actually have real impact.
Yeah, I agree. Yeah. Part of bull cycle is that a lot of resources get misallocated, if you will, or like allocated things that are not super productive. But I think that it could be like the rising tide lifts all boats, including boats that are not great boats. But
well, so much of the online yakety yak on Bitcoin is all buy Bitcoin all the time. But it's kind of like they're like, oh, well, it's up. Clearly, there's momentum up. You should buy. Oh, it's down. It's a steal. You should buy. And it's a little silly at some point because it's like, look, if you're 100% in Bitcoin, you can't buy. You you have no buying. And maybe if you have a real job and you're putting your savings, then your dollar cost averaging into Bitcoin. But one thing you can do if you're concerned about these things is just follow a basic rebalancing strategy. You decide I'm going to have this percent of my money in Bitcoin and this percent of my money in dollars, or actually even rebalancing between like Bitcoin and Doge, and you would be way up against either of them while still having been exposed to the upside of cryptocurrency at this point from doing that. And it's just whenever the percentage gets too out of whack one way or the other, you go, okay, I'm going to sell some of this and buy some of that. And You lose out on some of the potential upside if like one of these two things goes way up. Like there have been periods in cryptocurrency where its price rose so quickly and so dramatically that and then kind of stayed up that, you know, rebalancing would have been behind. Although usually that doesn't mean you shouldn't rebalance. Usually that means if you think that one side or the other might just kind of go up and stay up, you just make the balance on that one greater. So instead of being like 50-50, you're like 75-25 or 90-10 or something like that.
Yeah, I agree. I mean, even if you did nothing and just had a super long-term perspective on this, you will win at the end of the day. You just disregard the volatility along the way. I mean, if you you have not done anything since like 2013, 2014, you have done really well. You know,
in the history of Bitcoin, a strong argument in favor of that is if you had been trying to do pretty much any active money trading, you probably would have lost all your money in Mt. Gox, where had you simply sat on your coins, they'd have been doing just fine right now. Had you, taken down your key phrase and literally written it down on a piece of paper and left it in your safe deposit box, you would be doing just fine right now. Almost everything else short of that, people have managed to screw up. That is like the one true safety measure to actually use, but that's been doing fine this whole entire time.
Adding friction to access to your coin is the best strategy.
But definitely for my company, we have a pre-farm of our coin, but we're just sitting on it, right? Like we didn't do any pre-sale, we didn't do an ICO, we did none of that. We have like regular investors who are equity shareholders in the company who don't have liquidity until the normal times when companies have liquidity, and we have a pre-farm and we're sitting on it. We're holding for the long term, so I don't have to watch the price move daily and sweat bullets about it. I'm just whatever. It doesn't matter to me.
Yeah, that's the right strategy. Speaking of which, like,
go make an impact, right? Get use, get people doing it, like get using it. I like that, Bram. It's we need more of that in this industry.
Cool. Yeah, let's move on to the next topic because we spent too much time on this one already. Okay, so speaking of markets, I think crypto markets are kind of moving. A lot of what they call TVL, total value locked, has moved to the decentralized protocols, DeFi, if you will. And we've seen, starting with Uniswap, it's like 10,000 different MM pools of various kinds of curves and bonding curves and stuff like that. So have you guys been dabbling in DeFi, and what have you seen? What kind of innovations have you seen lately?
Well, I've been working on how to do DeFi better. You have these big problems whenever you build something on top of Solidity that are kind of inherent to doing things on Solidity, where you have like this issue that ERC20 tokens are very limited in their functionality, right? They're not real tokens in and of themselves. Like in Bitcoin, when you have a colored coin, it is a real coin, and you can do the limited set of scripting things that you can do in Bitcoin. But in ERC20 tokens are even more limited than that, right? So that's a problem there. And also there's a lot of miner extracted value. In Solidity, inherently, transactions within a block can be reordered, and there's no way of tightly tying them to each other and making them so they're locked into a particular set of arrangements for each other, and that's all that the miner can do. So in my cryptocurrency, if you don't mind me talking about all the great stuff I've been doing here, it has all the power of Solidity in that there are capabilities. So we support colored coins, which other coins can validate really are colored coins. So it's not like Omni Protocol where you need to be running a full node to find out if they're real coins or not. And they support actually having smart colored coins. So you could even do completely insane things like do a colored coin on top of a colored coin. There's nothing really stopping you from doing that. It also has this property which I put in just for aesthetic reasons, but it turns out to be really important, that everything in a block happens simultaneously. So the opportunities for a miner to play games are very limited because they can't reorder things. They can remove things from the set, but they can't reorder them. And also it has properties that a bunch of people can glom their transactions together, or like an exchange can glom a bunch of people's transactions together before even introducing it to the mempool, so people can't just pull them apart and decide subsets of them that they have. And then also if you have a Uniswap-like thing that's acting as a price oracle, it can have enforcement that it only announces one price per block. which of course dramatically it reduces opportunities for miner extracted value. So there is lots of room for improvement here that I'm working on. Of course, we just got our basic platform out and are now in the process of building out things on top of it yet. So lots more stuff to do. Can't really use all this great stuff quite yet today. At the moment, we're scrambling just to get our plotting protocol out, or our pooling protocol out, sorry. But this is all, coming soon.
Interesting. I'd love to learn more. But yeah, Jack, what are you working on?
And by the way, I'm excited. I feel like when you look at the amount of growth we have in DeFi, it's incredibly small compared to the total addressable market. So I think, I'm very focused obviously on Ethereum and Solidity and helping that community. I'm also excited about what Bram's building. I'm excited about other ways of doing things and just really like growing the market in general. But I'll talk just about Ethereum now. And I think there's a huge set of traction that's there that we're excited about. Me personally, in the last week, I did a transaction. It was like, I think it was like a $250 transaction on Uniswap. And that hurt. Okay. I think everyone's been in a place too where you're like, oh, I don't have enough ETH in this wallet. I need to actually log out, send some ETH to myself, and then do this again, right? We've all kind of gotten stuck there. And so, hey, I don't want to knock on Ethereum at all. Ethereum is absolutely amazing. And so Scale is built, actually, I'll talk a little bit about Scale, but Scale is built to help support and augment that functionality. And each decentralized finance application gets its own blockchain on the Scale network. There's a pooled security model. And then there's a rev share model in a decentralized fashion between Ethereum and Scale, where you're actually paying gas fees to get random entropy for your nodes on the Scale network. You're able to bridge back and forth. And the goal is to have a much more seamless, less expensive, zero gas transaction while also having meaningful security. But we need to, and you obviously, Tech, your Binance Smart Chain has just been booming because, we don't have those same fees. So within the Ethereum community, I think we're all trying to fix these friction points and keep helping Uniswap improve and grow and other DeFi primitives. And we're really close to seeing, I think, meaningful impact. But also, I'm excited too about this total addressable growth, because we look at AMMs and liquidity pools. We are touching just a hair of value across what we could touch across the entire financial ecosystem.
Ethereum's really been hurt by the core devs' insistence for a long time that they were going to do on-chain scaling. And that's clearly not going to happen. It's happened as much as it can happen. We're at the point now where there's only a handful of entities in the universe that are actually capable of making Ethereum blocks, which is a very unhealthy thing. And due to kind of not so great engineering at the core, it's only got like double the transaction rate of Bitcoin to make that happen. So we're seeing real transaction fee pressure, real gas prices happening now. And it's been clear for a long time that you're just going to have to admit that this is the way things are and start working on payment channel networks and just give up on this idea that you're going to do lots of on-chain scaling.
Yeah, and I think there was a commitment for a long time. It was prior to the validator market existing, where there was a commitment to say, hey, everything will only happen on the Ethereum mainnet, on-chain. And then now there's a little leniency saying, okay, we'll only have settlement on the mainnet, and we can use centralized nodes for rollups. But I think that too, I think people are recognizing the religiosity of how Ethereum can scale needs to bend a little bit, or we're going to lose users.
Yeah, when you're at the point where people are literally paying bribes to the few places that actually can make transactions to actually put their transactions in that are like kind of under the table, that's like, okay, this is more centralizing, not less centralizing. You need to like actually admit what's going on here and build the system around it.
But the one problem with like off-chain scaling, like layer 2s, for example, like is when DeFi is concerned, like composability is actually quite an important property of DeFi, right? When you can chain things together, you can create better, more efficient markets, if you will. And when pools are and value is locked into different silos of layer 2s, that gets lost. You can't really have more efficient markets by combining liquidity. So that's the one problem that I'm not sure is solvable. Maybe it is.
Oh, no, it's totally solvable, but you have to build the entire system around that feature, which you should. But you want liquidity across the payment network. It needs to be a payment network. It needs to not be like, oh, I'm going to lock my funds over here and do whatever I can do over here. And if I want to do something else, I have to pull them out of here through the actual mainnet thing and then into this other thing. It needs to net out skipping that. Is the central feature that you need to have for payment networks for them to actually be functional.
Yeah. Okay, so your solution is to combine all them payment networks.
Yeah, so
okay, go ahead.
I've got like a somewhat contrarian view here in that, I'll concede that there is functionality lost. However, there's so much basic functionality in decentralized finance of just needing to swap tokens, needing to buy, needing to make different, run different financial primitives that you are just worth it, frankly, to have many weakly coupled and linked databases that are just a message away. You lose the ability to do the atomic composability and to do flash loans and do some like advanced features, but I actually think you gain a lot more. And so there is a lot of ground to be made in terms of capturing market share and getting more users just by creating less cost and friction. And you do lose something, but I think you do gain a lot. And what you do lose, I do think there'll be other kind of made from scratch solutions. And I'm sure Bram, what they're working on is designed to try to kind of solve that at its core. But in the interim, there's a lot of people that love Ethereum, that use it, that want to trade ERC20 tokens for many various reasons. And I think we can enable that right now to happen faster and smoother.
In Chia, you can get flash loans from God. If you can make, because everything happens simultaneously, you can make like a Heisen coin. You can make a coin that's as big as you want, as long as it's destroyed in the same transaction as it was created, and you're good to go.
Cool.
Yeah, I've heard that concept. It's pretty cool. What do you guys think of cross-chain interoperability? Is that going to happen? Is it useful? You talk about payment networks as a way to connect. What about the other ways that people are thinking about decentralized bridges across?
Well, the fundamental building block of these things on a technological scale, well, one is you just trust somebody, right? So that can kind of go across things, but obviously has problems. The one fundamental building block of these things is secure hash pre-image reveals. And that allows you to pre-commit to things and then accept on the other side, yada, yada. And there's a bunch of yakety-yak going back and forth across things. But since everything supports SHA-2, and just using SHA-2 pre-image reveals as your fundamental unit of interoperation really can make it so you can speak across chains in all kinds of ways.
So HTLCs, right? Is that what you're talking about?
Yeah. You can implement HTLCs without using atomic swaps. It's actually kind of more convenient to do it. And if your on-chain language supports even minimal covenants, it's actually much nicer to do it using those than using these atomic swap things. But if you're talking about cross-chain, the basic trick, the most fundamental trick, is the one you have to rely on.
I'll talk about where I spend my time and focus, and it's within EVM interoperability. So in Scale, for example, there'll be thousands and tens of thousands of Scale chains. They need to speak to one another. Also, it'd be phenomenal if they can speak to Binance Smart Chain, if they can speak to Polygon, if they can speak obviously back to the Ethereum mainnet. And so there's this low-hanging fruit of interoperability that has immediate need for people that are using EVM. And that's, I think, like this first very critical interchain goal. And I remember 2017 when everyone was saying, oh, well, who's going to, there's EOS to Ethereum to Polkadot. And I don't know a single person who's ever needed to make a token go from EOS to Ethereum to Polkadot, to be honest. And but people have been talking about it for 4 years. There will be, I'm sure.
There's a use case nowadays, though. There's a use case. I have to finish stuff to Binance Smart Chain and back and forth with Ethereum.
Yeah, but EVM to EVM, right? EVM to EVM seems to happen a lot because of the token standards, right? But I don't know. I'd love to hear Bram's thoughts because.
Oh well, the very most fundamental thing for DeFi is the kind of stuff that Uniswap does. It's you're exchanging tokens for other tokens, and you have the problem of price discovery across them. Right, and that's why Uniswap in all of its primitive glory has actually been quite successful, because it's better than that than a lot of the other options.
Was that a Freudian slip there?
Uniswap.
Uniswap. Yeah. No, the places where Uniswap fails horribly are when people use it as a price oracle, which is not a great idea. It has some utility as a price oracle, but if you rely on it for a transaction whose value is pretty big compared to the liquidity of the market, it's just trivial to manipulate it, and horrible things happen.
Well, let's talk about Oracle, right? Oracle is where hacks happen, because that's where they manipulate prices using flash loans and stuff like that, and they get away with a ton of money. How do you solve the Oracle problem?
First off, you get over this delusion that your problem is that you need more trusted oracles, right? Like that's not how the world works. That's not a thing. The fundamental job of like the New York Stock Exchange is price discovery. Right? You can't say, well, here, we'll just have an oracle that tells us the price. It's like, no, the job of the whole system, of everyone working together, is to discover the price collectively. And if you start your DeFi project with, oh, well, we'll just have a price oracle, and we'll just make it be like 15 anonymous people, and we'll use the median thing of all of them, and yada, yada, yada. It's like, no, you don't understand what these things do. But like, it doesn't even matter if they're completely trustworthy people. It doesn't even matter if they're reasonably diligent. The kind of cutthroat stuff that happens in financial markets is such that people will go ahead and figure out what algorithms these, like, maybe good human beings who aren't trying to steal from the system, people will figure out what algorithms they are using to do price discovery and report it, and then they will manipulate it or find artifacts in how they're doing that and use that to extract value from the system. Like, there is no like God can't come down and tell you what the perfect price of a particular thing is. There's always inefficiency. There's always a need for creating liquidity. That is the job of the market. Do not assume that a price oracle will solve all your problems. Your job is to figure out a system that figures out what the price is.
So that is why I feel that aggregating liquidity is an important aspect of DeFi, because it does.
Yes.
Right? So that's the whole point of having DeFi, is one gigantic market connected. So it's very, very hard to manipulate the prices. That's the whole point. Yeah. That's how you solve it.
Well said, Bram. Well said.
So if I may, again, shill the amazing stuff I've been working on. One of the basic features that Chia colored coins have is you can make an offer. That if there's like 2 coins and you want to trade a certain amount of one of them for a certain amount of the other, and you don't want to put in an order on a trusted exchange because there's no exchange that you trust for this, or it's like a pairing that's uncommon or whatever, or you are an exchange and you're trying to talk to other exchanges, right? What you can do is make a transaction that like burns some of colored coin A and prints a bunch of colored coin B. And this won't be a valid transaction. This is not a valid transaction. It won't go through on the blockchain because you can't just print a bunch of colored coin B, because the coloring enforces this. But what you can do is take this offer, this combination of things, and email it to somebody else. You can post it on Reddit. You can do whatever you want with it. And if the other person on the other side of this decides they want to accept this offer, they can make their own partial transaction that prints a balancing amount of colored coin A and burns a balancing amount of colored coin B, and combine this all together. And because this nets out, this is now a valid transaction that will actually go through on the blockchain with no further interaction with you, the person who made the offer in the first place. And in fact, it's possible for someone to take a bunch of these offers and market making them and take some of the spread and do all the like normal financial stuff that people do with things without people having to trust the entity that's doing the aggregation beyond the, they might pocket the spread kind of stuff.
So it's kind of like a commit reveal scheme of sorts, right? Because you're committing your order, and then when it matches, it's the transaction goes through. So there's no front running. There's no trust in.
Oh well, I mean, there can be front running, because there is a spread, right? Like someone can take the spread, but that's this is something that you admit happens. Like people observing market pressure and front running it, and people pocketing the spread are absolutely fundamental things to what happens when you have trading. The more liquidity you have, the less of that there is, but you hit an equilibrium where the liquidity providers are making it efficient enough that they're not taking a huge amount off the thing, but they're taking enough that they stay in business, right? Like you hit some kind of an equilibrium there. And there really is a place in the system for large exchanges, because large exchanges can have rules about transparency and reveals and things like that. And you are entities that you are kind of trusting to not just outright pocket the spread, but help people provide liquidity when there is a spread.
Right. Cool, Jack. Anything before we move on to the last topic, which
let's
is
move on. Yeah, that interesting stuff. Yeah, great.
Oh yeah, NFTs. I think one of the things that happened last week was that Instagram is creating this week-long creator event, and part of the event was to teach creators NFTs. So NFTs definitely has captured the imagination of the mainstream creator as well as the mainstream users. The hype has definitely died down quite a bit. But what do you guys think? Whether NFTs are here to stay? Are they, how do you what's your perspective on the whole thing? Is it just NFTs, or is it things that could be used for beyond just doing collectibles?
It's so weird, and people don't know what's going to happen. I mean, there are these markets that just seem incredibly strange to me, like art, and by art I mean paintings on canvas, not including like digital art and stuff. That market is just weird, just very, very strange, and makes no sense to me. And like there are things that are just goofy in, like we were just talking about the price of Doge, and then there's like the price of these like modern art paintings.
Just listen to the oracles, Bram. The oracles tell you what to pay for the art.
Right. And then there's like and NFTs seem to be this distillation of like price of gold is similar to the price of Doge, right? Like NFTs seem to be the distillation of everything that's weird, and all of these things that are very strange but seem to have some staying power, just kind of all put together.
Yeah, so I've actually been going really deep with NFTs lately, and getting some interesting data points, and talking to world-class athletes and their agents who are looking to launch NFTs, working with partners. So you can actually mint NFTs on scale for zero cost and store the files directly on the blockchain. I think a lot of NFTs are a smart contract that points to a URL on a centralized database. So you're buying like digital art that could be rickrolled. So we aim to stop that on scale, or support real provenance and immutability of NFTs. But one of the things I'm seeing in the market is there was just this mad rush, and now there's been some flops, and we don't really hear about those. But I was talking to one of the top agents in the world, and he for athletes, and he said, "Hey, like the Mannings just launched this NFT, and it flopped. Everyone's scared now. No one wants to go." And at first it was like, "Hey, put your likeness on the blockchain and make a bunch of money really quickly, easily." And I think people are finding it's not a magic recipe for money, and their fans actually sometimes feel like they're getting dumped on. Also, people are finding that the athletes are trying to actually have greater connectivity with their fans in the same way they do with sports cards, but the fans aren't buying the NFTs. Speculators are. And so I think there's this like growth and like kind of drop, and then there'll be like this maturation process, and people are starting to think like, what else could we do? How else can we get more engagement with our fans? How can we give them something real, permanent, and meaningful? And so there's a lot of product market fit discovery that's actually really happening in real time, because this like print it and then sell it for like insane amounts of money is doesn't work off shelf for everybody. But I do believe in the space. I think it's growing. It took me a while to get it, and then I talked to people who are about half my age, and then I felt like I learned a lot really quick. There's just like you hang out with people who are 20 years old, and it's something that I think Bram and I have probably been in Silicon Valley about the same amount of time. Like it's like for me personally, like I had to give it a lot of time, and I'm seeing the path, but also seeing that it's not a clear. There's going to be some turbulence till we get to the right place.
Well, also for things where like with NFTs, it's just been this ridiculous money printing there, where even people who are just doing counterfeits, people just walking up to public murals and taking pictures of them and claiming it's theirs and making money off of an NFT, right? Like when you have stuff like that going on, inevitably you get market oversaturation, because people are going to do that until the market's sick of it, and so that just has to happen. You have to start seeing flops. You have to start seeing the ridiculousness of the whole thing fundamentally exposing itself. Now, whether it corrects back to something more normalized and steady, or it just flames out, it's too early to say at this point.
Yeah, I mean, for me, I think it is really just digital goods moving to the blockchain. And Gen Zs, like you said, 20-year-olds or younger, they grew up in the digital goods era, right? They live their lives mostly in the app store. They've been buying those digital goods in games or some of their apps, very naturally. So buying NFTs on the blockchain is pretty natural for them. Like for people who didn't grow up, in the App Store era, you want to buy physical stuff, like the art behind you. There's a physical NFT, Jack. So you value physical stuff more. Whereas like you feel that like brand, like NBA Top Shot, for example, they made I think $500 million in less than 6 months just selling video clips of things you could find on YouTube or on the internet in general. So why do you value those things? It's because they create a story, they create affinity, and they create this scarcity, whether it's, the serial number of NFT, it has meaning to those people who bought those NFTs, So, yeah.
Yeah, well, it's really a way of the thing that's very real there is it's a way of monetizing celebrity. This is something that has been happening as a trend in general. Like it used to be like movies were really sold via the stars that were in them. And now what's been happening over the last few decades is that the stars have just been going directly to the fans. Like, why should they subsidize the movie industry by appearing in movies is the only way that their celebrity gets monetized. They can monetize directly to people who, so if you're someone who like Kim Kardashian, who for better or for worse is a top shelf brand, then people are willing to pay money just to have association with you. But to the extent that this trickles down to everybody else and is useful for anything but monetizing celebrity, who knows?
You know, one thing I'm excited about is actually the long tail of NFTs, where you see this in like social media influencers. That the big influencers make far less on an accumulative perspective than the batch of the like middle influencers, because brands know they can move so many more people with middle influencers. And I think from an NFT perspective, for example, the NCAA made it legal for athletes to now, make money off their likeness. And, I could see.
Wasn't that generous of them?
Yeah. Hey, I'm a former NCAA athlete, college football player. And like, I mean, yeah, like I here you are like eating, work, you don't have time to have a job. You're working your ass off, like not making any money. And then they won't let you, they'll make lots of money off you, but you can't make money off you. But I actually could see NFTs flowing down into, not just the top 10 NFL players, but to every single college athlete. And then, decentralization playing a role where instead of a bunch of like big companies extracting value, like, with licenses, they're actually able to go direct to chain and like, work with an art student, put, limited sets of interesting things out there for people who I think are of that demographic that really capture, understand the value of those items.
Yeah, those are good points. I think that's the whole point of having things on the blockchain where you can directly interact with the fans, monetize without a counterparty or without a middleman, right? So those are all good points. I think we're kind of out of time. Any last words you guys want to comment or anything you want to say before we wrap up?
Things are crazy out there. It's going to stay crazy out there. You have these booms and busts. No one knows where it's going to go. I'm always looking towards building real value. We're still only really seeing the very beginnings of real world commerce being enabled by cryptocurrencies. And I think there's a lot more promise for that to happen out there. When and how that's going to happen is not super clear. I have my own plans for how to make this happen, but we'll see, how it all pans out.
What are you working on here? What's the next thing that's going to be coming out?
Colored coins, price discovery, market efficiency.
Okay.
Once we get pooling protocol out, everyone's freaking out because we're suffering from our own success. We cranked up the number of reward events to high enough that even a pretty small player in the market is getting regular payouts. But the rate of net space growth, it's been like 10% daily for a while now. So our net space started at around 100 petabytes, which was expected because we knew from testnet. And then our initial coin price was higher than we expected because we had no idea beforehand. So we're currently up to over 7 exabytes now, growing at about a rate of 1 exabyte per day. So because of that, you can have a pretty significant amount of space and still not be getting particularly regular payouts, which is unfortunate. It's still a plus expected value because those payouts are huge, but they're not happening super regularly. Because of this, everyone's breathing down my neck to get our pool protocol up, which was part of the plan the whole time. It's just we didn't think it would become so urgent so quickly. So we're working on getting that out as quickly as possible. But once that's done, lots and lots of price discovery oriented things.
That's cool. Awesome. Jack, you have any last words and also, what you're working on next?
Yeah, I think, the interesting thing for this week, like week in review, is just to see that we have a resilient ecosystem. We've taken a lot of punches collectively as an industry, but again, back to the builder theme, I think a lot of crypto value has been crypto on crypto or inner crypto value. And I think we need to start seeing cryptocurrencies and blockchains and decentralized business models start making an impact where it's not even recognized that they're being used. And I think we're getting closer to that, and we'll start hitting dramatically more people and getting more people actually touching the value, not just touching trading components. So we're getting really close. And I think that's why the industry in general has, been weathering these storms, which the storms, frankly, are good. If we just have crazy growth, it's like earthquakes. If the earth doesn't move, then you get a massive earthquake. We need these shocks to kind of give us more stable trajectory. But hey, I'm excited. Scale Network, has been up and running since October 1st, and we have Scale Chains going live now. For Scale Chains live, so you're going to start seeing many DeFi applications, games, Web3 applications, et cetera, going live. So we're pretty excited. We've been working around the clock, and just pumped to start seeing end users start getting to touch the network.
Awesome. Well, thank you so much, guys, for taking the time. It's been very interesting to chat with you guys. Hope to get you guys back at some point. I guess that's the wrap for us, and I'll see you guys later.
Hey, Bram, let's hang out before the next market cycle, okay?
Yeah.
Less than 4 years.
I just got fully vaccinated, which I'm very excited about. So,
all right. Well, I'm back in San Francisco. I think tech is too. We'll do this live someday in the real world.
Good way. All right. Thanks, guys. Bye.
Bye.